Hey folks, welcome to another SPY options update. This will cover the weeks of 40, 41, and 42. Specifically for this week, the 42nd week of the year from October 16 to the 20th. We'll look at my daily activities and my specific trades on Friday as usual. Overall this week, I'm up $661. The SPY is down this week. As we see here by the weekly bar, we have this large red candle and we have the green 9 EMA crossing below the 21 moving average. So that is a pretty bearish sign. If I go to the daily chart, you can see over the last few months, the S&P has been making lower highs. So as long as all of these exponential moving averages are moving down, the trend, at least in the short and medium term, is heading downwards. So here we have Monday, Tuesday, Wednesday, Thursday, and Friday. I'm going to go into the 15-minute chart so we can get a better idea of each day. Monday the 16th over here, I made a couple of trades which were bullish because at the start of the day, you can see the market went up and all the moving averages were heading up as well. So that's $182. On Tuesday, I only made one trade, which was a bearish trade, basically just selling a 437, 438 bear call. And why I was bearish is because at 9:50 or 12:50 Eastern, you can see the price moved up at the start of the day, and it even went above the previous day's highs. See how it tried to get past this point a few times on Monday? It couldn't. So on Tuesday, it did go above that, but it did not hold, and it quickly broke back down. So at 12:45, 12:50, as soon as I saw that the SPY has broken back down below, it means that this breakout over here was fake. It was meant to trap in buyers or people who are bullish on the market because they thought since it reached a new high, it's going to go higher. But there was no confirmation bar that it was going to bounce here. So when it went below there, it was more likely than not that the market was going to go down, at least for the rest of the day, if not the rest of the week. So around 12:50 is when I went bearish over here. And I just decided to put one in because for the first trade of the day, I don't want to take on too much risk because if I'm right, then that's good. I make money. In this case, just $45, but better than nothing. And if I'm wrong and the market decides to go back the other way, which would be like a double fake out, then I can just close this position. And because I didn't enter a large position in the first place going into this trade, I would not lose a lot of money. Now on Wednesday, I had a pretty good day, just a few trades here, mostly bearish, which worked out for me because as you can see over here, it pretty much just went down the entire day. Thursday was over here. I did not trade on Thursday because if I drop to the 5-minute chart, here's a look at what happened on Thursday. The head of the Federal Reserve, Jerome Powell, came out and spoke around noon. And you can see there was just a lot of up and down. And this would have been okay if you knew how to trade this, but I just couldn't make sense of what was going on. So because of all this volatility, I decided to just sit this day out. There wasn't a lot of directional movement because it started going up here and huge move down. So you would expect probably the market to go lower that day, but then it bounced back up and went above all of these EMAs here. So usually when it goes above the red line, the 50 EMA, it's a trend change. And on Thursday, there was just way too many trend changes. So I just decided to sit that day out and didn't do any trades. And then finally, we have Friday. I put in a few trades here. It looked like there's quite a bit, but really there was just like 3 or 4 trades that I put in. And some of these transactions are just trades that I've closed during the day instead of letting them expire out of the money. But I made $177 on Friday, and I'll kind of go through what I did. So the first trade here was at 9:41, which is this green note over here. And I decided to go bullish here because for the first half of the day, pretty much it was going down. And when it started to go up, I thought it was going to retest this red line, this 55-minute exponential moving average. And when I looked at the MACD, it has crossed above the 0 line for the first time during the day. The RSI at that time when I put in the trade also above 50, and that's usually bullish for the stock going forward. So I have my bull put spread here, meaning if the stock price goes above 423, so this was a sort of at the money or very close to the money bull put spread. And as long as the SPY finishes above 423 for the day, then this would expire out of the money and I would make a profit from this. But then instead of going up and breaking past this 50 EMA, which would be a trend change, you can see it got rejected over here there was a peak above it, and then the next few candles were going down. So basically this failed to go up any higher and it started to go down. So a couple hours later, over here, especially after this large red candle, it was not going to go any higher at this point. So you can see here a couple hours later at 11:17 and then 11:30, I sold out of those two positions that I just bought earlier. So for this bull put spread, I actually lost money, the 423, 422 bull put spread over here. You can see I bought them for -34, so this is where I made money. But then when I sold these and realized a loss, these were debited out of my account. So -49, -44 was how much I lost, and then +34, two of them was how much I made, which overall was a loss for this particular trade. But it was a good thing that I got out after a couple hours because I realized that the trend is not going to go up. And instead, I put in a short call at 423. I put in two of them over here at 1119, sold two short calls at 73 cents per contract. So right then, if the SPY ends the day below 423, then I just made $146 because $73 times 2 just from that one trade alone. So this purple line here is 423 and it looks like it did end the day below that, especially over here at around 3:20 Eastern time. I put in a 422, 421 bear put spread, meaning I would make money if the SPY goes down. And it looks like that's what it did for the day. I would make the most money if it goes to 421. It didn't really reach there, but it was still pretty good. And that was this one right here. I bought two of them for 28 and then I sold one later for 36, and then I split the other two over here, 421, 422 put for $92, which is the difference between this 422 put and this 421 put. So that's pretty much it for the trades of the day. There was really only 3 trade ideas, and the most important thing to remember is to get out of a trade that is not going your way, because having those stop losses is really important to minimize your losses. Imagine if I didn't close my bull put spread over here and the market went down further, then I could lose a lot of money. But luckily I was able to get out with just, $10 or $20 worth of losses for each contract. Because it's nice when you make money, but if you have really big losses to offset those days where you make money, then it's not really worth it. So overall, this is my returns for this year so far, week 42. There's only really 10 weeks left of trading in the year. And so far, it looks like I'm doing quite well relative to the SPY. And speaking of which, even just by this graph, you can see this is like a weekly chart of SPY. This purple line here, it's making lower highs and lower lows since week 30, which would be about July of this year. So let's take a look at the daily chart for SPY and see where prices might go for next week here. From what it looks like to me, the bears are in charge. Like I mentioned, we have these lower highs and lower lows, and if I draw this channel, you can see that we are going down. So if I zoom out and look at this from a longer trend, ever since the beginning of 2022, we can draw a fib retracement to the lowest point, which was reached back in October of last year, and we can see that right now we are sort of in between the 618 and the 0.5 Fibonacci levels. And basically the market likes to use these levels to go from one level to the next. And this important 618 level was just crossed. So if the market were to remain bearish for next week, then I would expect it to stay below this, let's call it 429.6 level right here. And the next target that it would want to hit is down here at 414. So next week, I'm going to remain bearish because right now we're here. And if we go up, there are some moving averages it has to get past first, this green and the blue line, the 9 and the 21 day EMAs. If it bounces off of those and it does not go above 429.6, then the next target is down here at 414. However, if the SPY closes above 429.6 on any day, then that's a sign that the bulls want to take this higher. But right now, there are a lot of resistances that it has to go through. It has to get past the EMAs. And once it does that, it has to get past the top of this bear channel, which has been in play for the last few months. And that's going to be a pretty big hurdle. So even if it can get past the moving averages and it's going up, if it gets rejected off of this point here, then it could very well go back and head down towards that 414.5 Fibonacci level again. So right now, there's more signs pointing towards that the market is going lower than higher, but we'll have to see and take it day by day. So thanks a lot for watching. Good luck with your investments, and until next time.